Welcome to Dennis Money's 2 Cents, your weekly recap of headlines and stories. I'm Matt.
I'm Victoria.
And I'm Rabih.
Booyah, people. I'm going to just say it. Energy's low, guys. Energy is low. We got to pick this up. Rabih, let's start here. Why are you tired?
I hate 3-day weekends, by the way, because they mess up my sleep cycle. So that's the first hot take. And the second hot take, today is the first day after the transition from TD Ameritrade to Schwab. And although, all sides try to do the best preparation they can, there's always going to be like some fires that need to be taken care of. And I've been a pretty good firefighter this morning all day long trying to figure out stuff for the trades. But market closed and we survived day one.
So that was the first item we wanted to talk about, was that we've mentioned before, but as you said, TD was bought by Schwab years ago. It is officially happening now, and I know this has made you tired. Okay, so Victoria, what's your excuse? Why are you so tired? What's going on with your energy levels?
Well, I'm with my family down in Las Vegas for the week.
Enough said right there.
That's all.
Yeah.
It's the best thing and the worst thing, I think, to be with your family for a week straight when you don't normally see them very much.
Yes, good, but also can be exhausting. Robbie's hot take, he doesn't like long weekends. You're just making enemies left and right. Okay.
How's your energy level, Matt?
I'm great, man. I'm as spry as a spring chicken. I'm feeling really good. I don't know what that means. That sounds like something my dad would say. So let's move on from that. Okay. So a couple of things we're going to hit. Market update. Robbie's got some good stuff as always. We're going to talk some flight hacking with Victoria. And then hopefully we have some time. We can talk about 529s and changes there. Are they becoming more appealing? Maybe. We'll talk about it. And then the restrictions that come from that. So Rabih, let's start with you. Hit us with the market update.
Market update. Last week was a really good week in terms of economic data that got released. And I promised you that I was going to talk about corporate earnings today. So I got that and a little bit more.
I've been riveted. I've been riveted, right? It's like we had a long weekend. I had to wait. I'm like, I was freaking out. So yes, I'm so excited about this.
Great. So let's talk about corporate earnings on an aggregate level. Last week, we were talking about the GDP and how it grew like 0.5% in Q1 and like another 0.54 in Q2, and how we're expecting it to grow like 1.4% in Q3. Corporate earnings for the last 4 quarters have not been as consistent, and they fluctuated. To give you like a sense, in Q2 2022, so a year ago, corporate earnings grew 6% for that quarter. Q3, they grew by 0.8, and then Q4 of last year, negative 2.64. Q1 of this year, negative 5.89, which if you are taking a recession technically as 2 quarters of negative growth, corporate earnings were in a recession for the last 2 quarters. And Q2 2023 is back up at 1.63%. So in the previous 3 quarters, the first 2 were down, and suddenly we came back as up, which we were waiting for the growth number for Q2 last week, because if earnings still came in as negative, you would expect the market to react, because this is an earning recession that corporations are not able to get out of. But thankfully they recovered, and I don't know, they say the stock market is forward looking like 6 months, and kind of predicted it. If you look at the return in the S&P 500 for the last 3 quarters, it grew 7% in Q4, 7% in Q1, and 8.3% in Q2. So
pretty consistent.
Although the stock market has been consistent over the last 3 quarters, the earnings of these companies actually have been fluctuating. And given that one is stable, the other is fluctuating, this just indicates that there's been a change in the PE ratio. It's been expanding towards levels where people think, oh, equity is overvalued, because the earning yield on equity right now is like 4.8%, where with a distribution that fluctuates left and right, whereas treasuries and bonds are going to give me a guaranteed 4 or 5%, right? Less risk, guaranteed return, whereas it's a slightly lower return with much more risk. So we will see how earnings show up in the next quarters, and whether expansion in terms of the multiple will be consistent, and whether that will put back equities on the map where they are more attractive than fixed income. For the last 10-15 years, equities were always more attractive than fixed income in terms of the yield you can get for a 1-year period, whereas this is a change of regime, and suddenly if you're going to be holding equity fixed income for 1 year on a yield percentage, fixed income gives you a higher return. But this is not the full story, right? It's just
for
the return component.
For the first time in a long time, though, to your point, depending on your holding period, and we're telling people this all the time, if you have a shorter term holding period, there's really, meaning like a year or less, there's no reason to be in stocks, right? With that money. That's never been, or that's always been true, but especially now with yields, high yield savings account at 5% or 4.5%, right? I'm not going to put you on this is more of just a general theoretical question, maybe a rhetorical question, as they say. Because I'm not expecting you to know this data off the top of your head, Rabih, but I would be curious to know, as you talk about like earnings versus what the S&P is doing, right? And the disjointment there, like the S&P just kind of moving along. I'd be really interested to know like what percentage of the investment every week or month, right, in the S&P or just in stocks in general, are people that are investors that even care about earnings. So for example, for example, like what percentage of investment is going into the market, like via 401ks? I'm sure that's data we could find, but
yeah, and it's definitely a big percentage, right?
Yeah, it'd be a huge percentage, right? Which would tell us, like, because someone might hear and be like, oh, well, earnings are fluctuating. They were negative in this quarter, and the S&P just kept going up. I think the first thing my brain goes to is, well, how much money is going into the market of people that are like asleep at the wheel, like a 401k. And I don't mean that negatively. I mean, like they're just investing on a regular basis. I do that with a good chunk of my money. I'm not looking at earnings at all. So that's where my mind goes, is just what percentage is actually even thinking about earnings. I guess a big chunk is not, right?
Yeah, a big chunk is not, but although this is like part of the system, there's always money flowing in and there's always money flowing out, because people are retiring, are withdrawing their money.
And the population's aging. Yeah, exactly.
Population is aging. So I think if you're thinking as an investor, you would zoom out a level and say, given this system of inequities, we know this environment, there's inflows, there are outflows, this is how we aggregate them. We've got different asset classes, they are bonds, this is their inflow, this is their outflow. Given the return they are providing on a specified term horizon, which one is better for me and how I would allocate resources. So at this moment in time, you would expect people who are not the passive inflowers into the market to be like shifting towards fixed income until equity prices drop down or earnings show up really well in coming quarters, so that PE ratio, thus the earning yield you receive from the stock market, is equivalent or better off in terms of fixed income. And in aggregate, it's more about the efficient allocation of your resources. And when we are talking from like an investor perspective for a specified holding period, I repeat that because if you're holding for 20 years, the stocks are still undervalued compared to bonds. Like there's no question about it. But for a holding period of a year or 2 years, it's about efficient allocation of your money.
Yeah, for sure. Victoria, any thoughts on that at all?
No, I think you guys covered it.
Rabih, I just am always blown away the nerdiness, the extent of our nerdiness that we can go to. Rabih, do you want to hold off on labor market stuff? We'll go to next week, or do you want to hit any of that today?
We can leave it till next week, but I have some information about consumer confidence and the core PCE that came in last week. Yeah. So core PCE, which is the Fed's indicator of inflation. We've talked about CPI, core CPI, PCE, and core PCE on multiple times, but core PCE, which is the most stable out of them all, the one that fluctuates the least, is the one that the Fed looks at, and this is what they want to bring down to 2%. Like when we say the target is 2%, this is what they mean. And right now it's really unchanged from the last month, and this is July number. It takes that much to show up. we are at 4.2%. So inflation is going down. Everything else is heading in the right direction, but jobs still not done. And it might be a matter of waiting for the lags to show up in inflation numbers, but we are still at 4.2%. And for the consumer confidence that showed up last week, consumer confidence is measured this way. If it's above 100, it means confidence is strong. People are kind of optimistic. If it's below 100, it's like people are panicking. This is not good news. Last month, it was 117, and it dropped from 117 to 106. So we're still in the positive territory, right? We're saying the economy is growing well. Consumers are still willing to spend, but not as much as they were last month. So all of these economic indicators are nothing but pieces that you put in the puzzle to try to see the broader picture and what it tells you. This simply tells us the economy is still strong because people are still willing to consume. Confidence is above 100, and inflation is still there to validate it, right, at 4.2%. But they are all trending downward, which just shows that monetary policy is doing its work and slowing down the growth. So this is where we stand. For me, the nerdiness of this, all the numbers going in the right direction makes me happy, makes me sleep at night.
And if we've learned nothing from the Fed meetings, it's this, which is nobody knows anything, including the Fed, and information can change so quickly. If you're wanting a quick recession tracker or maybe bear market tracker, I was at the gym this morning and I saw on CNBC on the TV there, the sound was off, but I could just see, and on the little thing down below, the little title they had was, "Is the market ready for an end of year rally?" And I was like, oh crap, here we go. That it's got to mean the opposite, because everyone's been talking recession. It's been nothing but positive, basically. And now everyone's it's kind of starting to turn a little bit. Now people are talking about, like, are we in for a year-end rally? And I'm like, well, now I'm calling for a recession. I think now's the time. Okay. Thank you, Rabih. Victoria, we're going to go to you. Did we call it? We're going to call you our resident flight travel hacker, or you were mad at me? I did it. We're live, so there's nothing you can say now. Our resident travel hacker hit us with this article about flights and how to optimize flights.
Yeah, totally. I will just say real quickly, I feel like we should have like is Rabih sleeping at night index, so we know how our investments are doing. So if we can make this happen, I would very much follow that. But yes, back over to flights. I don't really want to get pinned as that, but I do travel a decent amount. Yeah, I mean, Google Flights, I feel like a lot of people are pretty familiar with that. They just released data from the last 5 years about all sorts of different things, prices, but mainly people were really interested to see like how far out you should book your flights in order to save the most amount of money. Is it true that like booking at certain times of day or for certain days, does that save you money? But really, I think it was surrounded around like, how can I save the most money, the most amount of money on this? So it was really interesting to see. Yeah, it references some like maybe some myths, right? You mentioned this about like certain days of the week, so which I thought was really cool. This is really cool data. Let's break this down. This is awesome. Yeah, I feel like I have always heard the myth that it's cheapest to book flights on like Tuesday afternoons or something. Have you guys heard this? Yeah, definitely. So apparently that's not all that true. And in fact, like you waiting until a Tuesday could actually end up costing you more money because there's certain like time frames that will on average save you the most amount of money. So for instance, they looked at domestic travel and international travel. So if you're on a domestic trip, the best range is about 44 days out or a month and a half. And then for international, they drilled down. So US to Europe, you're going to want to do about 5 months out. And then US to Mexico or the Caribbean, about a couple months out, which I thought was really interesting. Very cool. I feel like I book my international trips a lot further out than that. I was just going to say that. I think maybe I'm going the wrong way here, where I'm booking way too far in advance. Yeah, I thought that would save me the most amount, but no, apparently. Rabih, you rolled your eyes at that. What's up?
I usually book international flights like a month and a half before, and they're not cheap. Now I know why.
There you go. Now you know
I
why.
think we're all on the outside
Yes.
of the optimal range.
Yes. So really quick. So this is saying, because I think I'm gonna guess that Victoria, you and I are more of the norm compared to Rabih, just in the sense of, I mean, brain like power. I definitely am in the norm compared to Rabih. But specifically around, I think you and I are probably in the norm in the sense of booking like an international trip far more in advance, right? Because a lot of times you're going to say, oh, we're a year out, like we're going to go to Europe next year. I think that's probably pretty normal. And you're going to start looking for flights. Whereas Robbie's saying like a month out or month and a half out. But what I think is interesting is you might plan that trip a year out. But what this data is telling us, just purely off of data, is saying you actually want to wait a little bit longer and get a little closer to that trip to actually book the flights, right?
Yeah, I think so. And I think most people will travel with like starting where they want to go first. And I think like the way I've traveled, at least back in college, and to try to do it more cheaply, is just like looking for the cheapest flight and then deciding, okay, cool, that's where I'm going. But I don't think I'm going to do that anymore because that was pretty exhausting. So now I need to follow the data that I am reading here.
Yeah. So you're saying you would let the flight price dictate where you're going.
Yeah.
Got
Exactly.
it. As opposed to pick where you want to go and then find the cheapest flight.
Yeah,
to that place.
That's how I've done it before. I think my best one that I've done, I think it was like $500 or $600 to Australia round trip. Was one of my best. I personally never spent more than $1,000 on an international flight, like ever.
You are a resident flight hacker then. It is a done deal.
A little bit, but that's because I used to do all the layovers. And so part of the study also showed that if you do a direct flight, I think it costs you, I want to say it was like 20% more in fares, which makes sense. So I think I have to upgrade my travel spending a little bit.
Yeah. So what about the best day of the week to travel? The data goes into that, right?
Yeah, I mean, I think this was pretty in line with what I just experienced and guessed. Sundays are the most expensive day because everyone's trying to get home. But generally, if you go, if you're flying between like Monday, Tuesday, Wednesday, those are the cheapest days to actually fly. So
Got it.
I feel like that was pretty spot on with what I thought.
Yeah, I would think that as well. Sundays, that doesn't surprise me at all. I like that it gives actual data of you can save up to 12% on airfare if you're traveling Monday through Wednesday as opposed to a Sunday, right?
Yeah.
I love that you put in the notes here. It is more expensive to fly nonstop, and then you wrote next to it, duh. So, but what's interesting is I think you just mentioned this, but the actual percentage you could save. Did you hit that again? What you're actually saving if you decide to do a layover?
Yeah, it's on average about 20%, which I felt like was pretty spot on with what I've seen.
Yeah, which go ahead, Rabih.
Depending on the layover, I think you can save more than 20% because if your layover is like 12 hours and it's during the day, you just added another destination to your to your trip, and you're just touring around and then coming back, assuming you can like survive and not die of exhaustion.
I think
so
that's
dramatic.
So dramatic. His energy levels are down today. But that's what I thought of when I saw this. It's like really cool to see 20% discount. Okay, that's cool. But then you got to think, Rabih just hit it. Like, what is the actual cost of energy and your time? Like food. Yeah. Like, I'll be honest. I rarely, if ever, I'm trying to avoid a layover, like at all costs. Like, I don't think I've had a layover in a flight for a long time. Outside domestic flight, unless it's just
travel standards.
I mean, if hot take, if I'm going to be snobbish on anything, it's going to be travel for sure. I've definitely gotten to that point. So, but not like crazy, right? Just saying if I can avoid a layover, I'm going to do my best to do so, because a 20% drop in that price to me is not worth the layover. Depends on, right? For some people it might be, but I think at least you have the data. You're going to save on average about 20% if you do a layover, which I think is good to know. You already hit, I think, on the whole myth of Tuesday being, do you want to, anything else you want to hit on that at all?
Yeah, I think the savings on average is like 1.9% cheaper if you book like during the week versus the weekends. So really like it's kind of a wash. And again, if you're waiting, then you might fall out of like the optimal range of booking flights. So really just book it when it's convenient.
Yes, that is the message there. What about holidays?
That I was most excited to see because I mean, like I said at the beginning of the call, I don't live close to my parents. So this is something that is on my mind, booking flights and figuring all of that out. So they looked into Thanksgiving and Christmas, and both are different ranges, which I thought was really interesting. So for domestic travel for Thanksgiving, prices bottom out on average about a couple months out. So would that put us like right now?
I was just going to say, we're getting to a point
do I have to buy my Thanksgiving
booking
tickets
flights?
home?
Yeah, booking flights right now is probably key for the holidays.
All right. Okay. So I'll wait till about the end of the month to book my Thanksgiving flights. And then for Christmas, it's actually about 3 weeks before.
Which shocked me, by the way.
That very much shocked me too, because I have never, my mom would kill me if I didn't have flights booked by like October. She like has to know that I'm coming home. So yeah, apparently if you need to go home for the holidays, about in a couple weeks, book your Thanksgiving flights, and beginning of December, book your Christmas flights.
I think this is kind of a lesson in, like there's an interesting, I think, psychological lesson here that you just referenced. Like the data might show 3 weeks out for Christmas, but how many people would actually do that to exactly what you just said? Like your fear of either missing out or your parents being on you. Like, I don't think too many people, Robbie, you tell me if this is incorrect for you, but I don't think too many people would look at that data and still feel totally comfortable waiting just 20 days before the Christmas holiday. Because when I saw that, I was very shocked. I was like, I was surprised by that. I can't imagine too many people feel comfortable with that, even though the data says that, right?
Yeah, and I'm curious to see like how the release of this study influences flight prices now that people
the same thing.
Like know this, and I wonder
and
if
the airlines know this. Yeah.
And the airlines know this. So I don't know, maybe like all of this data is going to go just right out the door because now people are going to like try to get within that window, but I don't know. Maybe
we call that the efficient flight market. That's what we call that.
Exactly. I'm thinking of this. This is like
I
day
know you
trading,
are.
but for flights.
I know you are.
Oh.
I know you're thinking about the efficient market hypothesis.
Yeah, it's
right
like
now.
This ticket price, how efficient is it? Does it include all the information of all the travelers around the world and their timings? Like it's the same theory, but
what arbitrage opportunities do we have with flights? Yeah, exactly. What I'm thinking about. Okay. Anything else, Victoria, that you want to add on this?
No, just wanted to share some cool flight data that just got released a few days ago.
I think it's really cool. And I just was having this conversation with somebody. I was flying recently and I don't remember the details, but I do remember thinking, and if any listener is out there and they want to give us some insight, or maybe you guys know, how in the world does it make sense that on almost every flight I've been on recently, the flight is overbooked? What is the strategy here? What is happening with these airlines intentionally overbooking flights? And then every time I'm sitting there waiting to get on the plane, they're announcing like, we will give $1,000 for anyone that wants to give up their seat to this other person. What is the strategy there? Anyone, do you guys have any thoughts, or we'll just wait for a listener to write in? Our resident travel hacker.
If I'm not mistaken, so airline companies just look at historical show up rates to their flights and how many times people do not show up. And they decide to overbook it to compensate for those people who don't show up, because those people paid for the flight and they're not showing up. This is free money for them in that sense. And the cost of giving points or giving you a night at a hotel is still cheaper than the cost of missing out on these people who do not show up.
Got it. Victoria, you're nodding your head. So
yeah, that's
clearly I'm the idiot here. It's very obvious you guys knew the answer. And I was like, apparently I need to do more research. But so you're saying the aggregate data, they're looking at the aggregate data and just saying on average, we're going to have people not show up. We'd rather overbook it based on the averages.
Yep.
Got it. Okay.
Yeah.
Well, Victoria, anything you want to add there? You were nodding vigorously there.
No, I mean, Rabih hit it. That's exactly what I understand it to be. And I was just kind of, have you all like taken one of those before? And like, how much have you gotten from it? You've never, Matt? Of course you haven't.
What does that even mean? No.
Rabih?
No, but something else about like the airline industry that fascinates me, all these miles that you get are literally a different way for airline companies to finance themselves. Like companies finance themselves either by raising equity or raising fixed income. Those points are a new liability that they add to their balance sheets. So in a sense, they expand their asset value by simply giving points out, which fascinates me how accounting can create value out of thin air. It's like,
yeah, or have you heard like how people like taxes on that, like especially if someone dies when they have a bunch of points and like transferring, like we could do a whole thing on just like travel points or flight points.
Yeah, that's actually a comment on that. We did a workshop a month or so ago in California, and we were showing P&Ls and reviewing a P&L with a group of dentists. And somebody on the P&L, it referenced points. It referenced like a reimbursement of credit card points that turn into money. And there was some murmuring in the crowd around how maybe they don't do that. And they were like, wait, should I be doing that? Should I be talking about my points with my accountant? And we are like, oh, like wink, wink. Yes, you should. But if you convert your points to dollars, you probably should be putting that on the P&L or accounting for that. But again, we are not CPAs. So, okay, that's great. I love that data. Hopefully it's helpful. I'm not sure. Maybe we'll push the 529s to next week. What do you guys think? We'll give a little teaser. We're going to talk 529s next week. I'll pull a Rabih and we'll do a teaser. I just want to keep.
It deserves more time than
it deserves more time. So we'll maybe lead off the show next week with 529s. Okay. Guys, any other final comments, thoughts you want to add? Rabih, travel, you want to talk about how Delta works or anything like that?
No, I'm just going to go book my flight for the winter break right now.
I was going to say, yeah, that's the takeaway here. We're getting close. So Thanksgiving, we're pretty much within that time frame. And then for Christmas, if you have the guts, maybe wait till the very beginning of December. We'll see. But all right, guys, Victoria, thank you. Rabih, thank you. If you are listening live, we appreciate you. If you're listening on the podcast over the weekend, we appreciate you. That is our 2 cents. We will see you next week.